So here is the instance. It looks something like this. I'm logging in with my credentials. Here on the left hand side you see the responsibilities. Okay. There will be a general ledger responsibility, accounts payable responsibility, receivables responsibility. I'm just checking in for the GL responsibility, if it is there or not. I don't think there's a GL responsibility. So let me add the responsibility, because through general ledger responsibility only we can define these components of ledger. So what we are going to do now is we are going to define a ledger for the business. With this also happens simultaneously. With this also happens is designing of your multi-org, a business structure. There are two things here. One is your accounting structure and one is your business structure. So when we are determining what a company's accounting structure should look like, chart of accounts, calendar currency, how many segments in chart of accounts, when we are designing that, we also need to simultaneously design the multiple organization structure. If a business, say, has got more than one companies, we call it as a multi-org structure where you have more than one company. So a business structure here consists of a business group, that is the topmost entity. It's kind of an umbrella under which falls the companies. What all companies does that business group caters to? There can be multiple businesses, line of businesses a group has. See, Virginia has got a multiple line of businesses. I think Virginia has got Oreos and also they are into that. The best example is British only, because they have got many. Others, it's not coming into my mind right now. What all big business groups we have here in USA. So British Telecom is one. British Gas and hello. Somebody wants to say something?
Yes, I can see your screen. It says, let's design our own fictitious business. That's the right screen?
Yes.
Okay.
Yeah, let me know about this too. Sometimes there will be a lag in between. If I am scrolling down and you're not able to see, and if you can see one screen for a long period of time, or if I'm talking something else and the screen is showing something else, do let me know. Then I can just refresh it. So here we have defined, we are going to define our own fictitious business group. Although I've named it as Orange, we can take it something else also. So say Orange Group of Industries, which is based in California, has got 3 companies under it: communications business, infrastructure business, and motors business, which are operating in multiple locations, so US, Australia, and UK. And these companies will have their own departments too, or the independent departments, specific departments with respect to their type of business. So to design a structure, it should look something like this. One more PPT I can show you here is, I think Hafter's got that, no. Okay. So when we are defining a multi-org, in parallel to designing the accounting structure of, say, ledgers and legal entities that we have to do before we can get into multi-org. So the prerequisite is to define the accounting structure first and then the multi-org, because multi-org is also going to capture company level information. Which company the transaction has to be done. All those information will be captured with the help of multi-org, and then a relationship will be created between these two accounting structure and organization structure. So what the screen says is multi-org in an installation. How do we know there is a multiple organization structure existing? When there is the data for multiple organizations, so there's a business group, there's an operating unit, there's an inventory organization. For every company which is doing a business, say there's a manufacturing company which manufactures laptops and electronic items. What do we need for this? You need an inventory house, a warehouse, stores, your physical location where these items are produced and stored, the location where these items are shipped, or even if we have procured from some supplier a byproduct to manufacture these items, where are we going to store them? So we need an inventory organization for that. Now this inventory organization should also be tied up with the local location, which we call as operating unit. Operating unit is a unit where all the selling, purchasing, all the transactions of a business takes place. How many laptops have been sold? How many other products have been acquired? So all these details are taken care of by operating unit. So every operating unit can have multiple inventory organizations. So when we have a setup like this, a setup of business group, operating units, inventory organizations, and HR organization, which through HR organization we will be recording employee information. There is no point in doing all this if we don't have employee information in our ERP system. Why do we need employee information? Because it's people, right, who are doing all this business. People are raising purchase orders, people are raising invoices. There are people who do sales, so they're recording their sales related information in ERP. They are employees who have expenses, who have reimbursements. So these are all the people we need to manage. So all the employee data gets recorded in HR organization. That is what is called a multi-group. There's a little explanation about these business group and all. It says BG is the top level in the organization structure. Business group is the highermost. If you see in the slides, this is how a structure needs to be designed. There has to be a business group, a ledger associated to a business group. Again, ledger will have those 4 C's, chart of account, calendar, currency, and accounting convention. Ledger will also have legal entities associated to it. Which corporation it is, which company it is. Say there's one ABC corporation in India which has got 3 ledgers. Why 3 ledgers? Because these are maintained in different currency. Per ledger you can have only, per business you can have one primary ledger. Okay, and then you can have multiple ledgers. Say in America this ledger is primary for America. And America ledger can have multiple secondary ledgers too. We'll explain this, we'll get into this a little later on. First understand the primary ledger concept. So every business will have a primary ledger to record their accounting transactions. These ledgers will be associated with the companies. This is a new structure in R12. Earlier, legal entities were directly connected to business group, which was not solving the purpose. Now, legal entities are also used for doing intercompany transactions. So, A corporation, B corporation, and C corporation can do transactions among themselves. That's the reason legal entities been introduced after ledger. All these legal entities will have the operating units, are the where operations of the business takes place. This could be in multiple locations. So legal entities, this is an American legal entity. So this can have operations, say, in California. B1 operation is in California and B2 operation is in New York. So we have two operating units. In California, they sell their motor vehicles. In New York, they sell their electronic items. So operating units takes care of sales, purchasing, revenues, expenses of a unit, the business unit. You can also call them as business unit.
What's that?
Yep.
So
yes.
For the legal entity can only be one, right?
Legal entity can be multiple. Again, if they are in different locations, you can have multiple legal entities.
So each location has its own legal entity for like Ledger America, so it has one legal entity, or it can have multiple?
It can have only one.
Yeah, okay. So each country, depending on the currency, can have only one legal entity.
Yes, that's correct. Depending on the currency, you can have only one legal entity.
Oh, okay. Right.
There is no point having multiple. Why? Because anyways, this legal entity is taking care of the legal requirements, right, for filing taxes and other things. If you have another legal entity to do the same, it doesn't solve the purpose. Okay. So here you have, again, this ledger in England. They have a legal entity, one operating unit, and one inventory organization. We might not need inventory org here. Maybe it's a service-oriented business. There is no inventory org, but you can also design inventory org if you have to after operating unit. So operating unit, inventory org have to be related. OU and legal entity have to be related. Legal entity and ledger have to be related. They cannot be direct relation between ledger and operating unit. Operating unit cannot directly get connected to ledger. It's with the help of legal entity it gets connected to ledger. So this is how the relationship needs to be established between all these components before we can get into designing something. This was an old one where if you see here, you mean legal entity and ledger? Ledger is where we are recording our accounting details. Which account we need to record our transaction. Legal entity is determining your tax related. It's representing a company. You can take it like this. It's representing a company. So legal entity, this B corporation is representing the American business. Okay. And whatever accounting happens in this ledger is associated with this legal entity. I'll show you more about legal entity so you'll get more clear. This is Multiorg. This is another structure where you have a very small example. One legal entity, you have a ledger, legal entity, operating unit, and inventory organization. I think in this, yeah. It's an association, partnership, or a proprietorship. It's a legal obligation to take care of the legal obligation of the to pay your debt. I don't know who is, but I can hear my. Ask a question. Okay. So that is what a legal entity does. Now getting into the application and going back to our structure. This is the one, right? Yeah. Now if we have designed this structure, so we have a business group and we have Orange Communications in US, Orange Motors in UK, Orange Infrastructure in Australia. These are the independent companies in different locations. For that we have ledgers. We have primary ledger. Now this can also be termed as a secondary ledger. We'll see what a secondary ledger is. Again, there's a primary ledger here and the operating units. Again, there's a little problem here. It should be the other way. Ledgers should be associated first and then legal entity. I'll correct this. It didn't come out that way. Then under operating units, we should have inventory organization. So we'll get into the application and we'll design something. So I was looking for the GL responsibility. Let me just add the responsibility. It's a system administrator responsibility. If we have to do any kind of maintenance, say adding users or adding responsibility to users, we can do from here, taking care of requests, programs that we can do from sysadmin responsibility. So this is my user. For the time being, I'm using this instance because my Vision instance, where I generally take sessions for, it's down. It's not working. So the setups which I'm doing here, I'll replicate these setups in that instance too. Maybe in a day it should be fine. So this is an official instance which I'm using here. Let me just check for the general ledger responsibility. We need general ledger responsibility to do these transactions. So I'm taking general ledger super user. Understanding these things are very important, the initial aspects of configuration. So log into your responsibility. These are menus. What a user, every user will be assigned a responsibility. A responsibility like this will be assigned. Say I am a finance clerk. I need to enter daily transactions, or I need to do consolidation and draw financial reports. I'll be assigned a general ledger responsibility. Now, if there is a general ledger a finance manager, he will also be assigned a GL responsibility, but say different menus. Now, a manager does not need to enter journal entries. That's not his job. He's not going to get into entering journal entries and see which journal entry is correct or not. His responsibility is to do budgeting. So this menu will be associated or assigned to him, and this menu will be deleted from that responsibility. So you can customize these menus depending upon the positions and responsibility of the employees. Again, this will happen with the help of system. Functional people do not do this. We can always guide the sysadmin people to perform this action. Now, all the responsibilities that we are going to see now will always have a setup menu. Setup is used to do initial setups to your module. How this module is going to behave as per your business requirement is what the setup part will do. So setup will consist of setting up your whole of your module. Now what we are doing is we are setting up accounting structure. In R12, they have introduced a guided tool which is called as Accounting Setup Manager, which helps in doing the accounting setups. So you need to navigate like this: setup, financials, accounting setup manager, accounting setups. It opens another form. When we have to enter a journal entry, go to journals and enter. When I say enter here, a form like this opens. This form is different and this form is different. This is the basic form in Oracle application. We have introduced these kind of forms which are called as self-service forms to record or to do configurations for those components which are shared across. Now this ledger that we are going to define here, a ledger which will be shared across all the modules. The journal entry which I enter with the help of this form, say if there are any journal entries here, let me find some. This will be specific only to GL module. Now this journal entry I cannot query from any other module. This is very much specific to GL module. Okay. But this ledger I can always assign to other modules. So that's the difference between these self-service forms are created for those components which are shared. Say customers, suppliers, we need to define in these forms because they are shared across the application. So create accounting setup. When you say create accounting setup, you have the option to create your legal entity first and your accounting setup also. So right now I'm skipping legal entity. Let me go ahead with defining the accounting representation, which is nothing but ledger. So say next. So when we are defining a primary ledger, the primary ledger of the business, we need to have chart of accounts, accounting calendar, currency, and this is accounting method, which is by default. There are two ways of accounting. In the example I mentioned, cash and accrual. Cash is when the customer is giving you an upfront payment for your services or the product, and you have cash in your hand to recognize your revenue. And accrual is where customer pays cash after some period of time. This is where most of the businesses do accrual basis of accounting. It's most of the business will do that type of accounting. Some businesses do cash basis also, and some businesses do both. So cash basis and accrual basis as well. So before defining primary ledger, I'll need these. These are mandatory. A star is here. These are mandatory components. So let us go back to the application and define these 4 C's. Financials, setup, financials. Currencies will be there. Let me show you the currencies first. Why we are defining currencies is, first of all, to record transactions in those currency, and secondly, to deal with multi-currency transactions. There will be transactions in different currency also. Not necessarily I'm doing transaction with only my base currency, which is assigned to the primary ledger, but there could be different currency as well. So here all the possible currencies are listed. This is by default provided by Oracle, unless until there's a new currency introduced. So we don't have to worry about currencies, it's already defined. That's 1C done. Calendar, we need to define a calendar here. Go to calendars, types. Now identify if it's going to be a year, the year type is going to be a calendar or a fiscal. Calendar is a year which is starting from January till December, say January 2013 to December 2013 is calendar type year, and fiscal is it starting from April, say April 2013 to March 2014 is a fiscal year calendar. So which type of calendar your business follows, you can determine here. So I'm just defining one and giving a naming convention. Why do we use naming convention? Yep.
Marcella, the fiscal year, is that customized or no?
That's not customized. That's the option given by Oracle.
Oh, so it always starts from April 1st?
Fiscal year will always be like that.
Okay. So the year end and year end is March 31st, right? So that's the reason.
Well, fiscal
Yes.
can be also due to, it can be determined by the individual company how they want to close their business year end.
Yes. But again, they will have to classify it as a calendar year or a fiscal year.
Right. No, what I was saying that is based on.
Sorry? Yeah, that's what I'm saying. The duration. I'm just defining a period type here and determining how many periods are there in a year. So here comes the determination of if you have a calendar type of or even if you have fiscal, anyways there are 12 periods. But some companies might also want to maintain adjusting periods. For that we need to define additional years. Now say if I define 13 periods per year, obviously there are no 13 periods, there are 12 periods, but one period they are keeping for adjustments. The entries which do not go in the accounting year will be recorded in that adjusting period. So I have just identified my calendar by a unique name of my business.